Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. Today, we welcome my friend Azim Nagree. He is here with me in Austin, Texas. He's head of M&A Origination at Herringbone Digital. It's a private equity-backed platform executing a buy-then-build strategy across the digital marketing agency services, legal, healthcare, digital home services, dental. Let's dive in. Azim, thank you for joining me. We've been trying to get this scheduled for a while.
It has been. It's been a while, Peter. You're a very difficult man to pin down. So I'm really excited to be sitting down with you today and chatting away.
Likewise, you have the pleasure of sitting in the M&A seat for a variety of different organizations, both from a private equity perspective, strategic perspective. Before we extract that perspective, help us understand what qualified you to become the M&A practitioner that you are.
Yeah, thanks. Great question. I'll show my age here a little bit. But growing up in Australia, which is where I was from, I watched way too much LA law, and it was the career path. I wanted to be a trial litigator. Fast forward, I went to law school. I did that and realized that trial litigation was not available to me, so it's fine. And then ended up in corporate law. And corporate law is really, really, for the most part, kind of boring. But M&A law...
Shocking.
I know, isn't that amazing? But M&A law, as far as the spectrum is concerned, is actually really, really fun. So that was my sort of first taste for M&A. Read too much of the Barbarians at the Gates or what the 80s did with M&A. So, that was kind of where the appetite got wet, so to speak. Moved out of the legal side to move into consulting, where I got to see some of the commercial aspects of transactions, and that just further whet the appetite. I took a couple of different roles along the journey, including doing my MBA, and eventually came into a position where at Scorpion, they were looking for someone to run their M&A department, and I just happened to have the sort of perfect background to do it. So that was where I really made the transition into full-time corporate development, and it's been a fantastic ride ever since.
Now, we're both here in Austin, Texas, and Dell has a foothold here, so does Intel.
Yes.
You advised for Dell for a little bit. What about the transition from Australia to the US? Again, from legal to M&A, kind of give us some context to that, because people think, the US and the rest of the world's exactly the same, and it's not always the case.
No, it's not. And I think the common theme there was strategy. Like every company, big and small meaning like, $1 million of revenue, all the way up to the Dells of the world, a couple of $100 million of revenue, they all need to have a strategy. They all need to have that North Star on how they should be proceeding. And so that was the sort of commonality between doing strategy consulting in Australia, now doing internal strategy work for Dell. And obviously part of that was thinking about organic growth as well as inorganic growth as well. So there is a lot of commonality at its root cause. I always joke that Australia is very, very similar in terms of business, just with one less zero at the end of the transactions.
Yeah. What was the actual opportunity that brought you to the US?
So grad school. So that was something. So I was doing strategy. Sorry?
We hooked you with our educational system.
Oh, no. The grad school was what was the attractant to me to come. It was getting married to an American girl was what really hooked me. No, so I was doing strategy consulting back in Australia for Bain & Company. And, part of that normal consulting path is to either continue going down the consulting route or to take a step back and do your MBA. So I went down that path. I was very fortunate to get into a great school out in the States. And the plan had always been, do a couple of years at corporate America and then head on back. But love has a strange way of making you do things that were not necessarily part of the original life plan.
Yeah, for sure. You have all the trappings of someone who is well positioned for M&A. You have an international disposition. You come from a friendly country. You have the legal confidence, the business strategy side. You've seen it at the big level corporations. And then this small technology startup says, hey, we need someone to lead up corporate dev. And I say small, but relative to Dell. And you step into this corp dev role at Scorpion, a department of one. Help us understand what that looks like when you step into a corp dev role to launch the M&A strategy on behalf of a company.
Yeah. So this was a brand new department. Like they'd not even thought about corporate development as a function. They've not really thought about M&A as a strategy. So this was all relatively new, but it was part of their strategy. And so back to the comment I made before, thinking about organic growth. Now we're very, very well versed in that through 20 years of being successful at that. They'd not really dabbled in inorganic growth. So walking in, the mandate is, hey, not only do you need to go and sort of buy some companies that you think might be a good fit for it, you need to do everything. You need to go and figure out what the strategy is. What is the type of company that would fit within the buy box? And then you need to go and build the infrastructure to actually go and find those companies. You need to build the strategy around how you're going to value these companies, get board approval. It was very much build the entire department from scratch, which was really, really fascinating and something that I was, very, very happy to have the experience doing. But, something that you and I have talked about earlier, Peter, it obviously going to have a material impact on deal flow and deal velocity specifically, because if you're expected to be doing every aspect of a deal as well as sort of building the plane while you're flying it, there's only so many hours in the day. And so, deal velocity is clearly going to be, a casualty of.
Yeah, being a department of one and leasing or borrowing resources from the rest of the company
Mm-hmm,
means you have to be very careful with how you're prioritizing deals
mm-hmm.
and activating other departments' involvement when there's a real opportunity versus, hey, you just think it's really interesting. So, how long did that take? If
It took a while. We actually did our first transaction relatively quickly after I was there, and we learned a lot. We learned a lot about that transaction, and specifically leading to the exact point that you made, which was, I could absolutely manage the deal part of a transaction, but you absolutely needed to leverage other departments, not only for diligence, finance, tax, HR, IT, etc., customer, commercial. So now you're having to go back to departments and ask for time from folks who have got full-time jobs already. But then also critically important, I think this is sometimes often forgotten, is you need now then to borrow time, resources, energy when it comes to integration. Because you can do the deal, you can sign the papers, you can ink the transaction, but then you need to find a way to do the integration for that acquired company into an existing business unit or into an existing division. That needs to be really well thought through from the outset of the transaction, not post close.
I'm really curious to what your week looked like. So, of course, you were building out the foundations for the M&A effort,
Hmm.
aligning with the stakeholders,
Hmm.
understanding the investment committee criteria, kind of like getting comfortable in the role and then processing deal flow and then bringing opportunities. So, give us a sense. What did the week look like if you were to break it down into like a typical week?
Yeah, of course, no such thing as a typical week because it all depends upon where you are in the midst of a transaction. If you're in the middle of due diligence, well, 90% of your week is diligence, or if you're negotiating deal docs, etc. But in general, it was very, in an ideal week, it was sort of, one third to one half generating deal flow, talking to, building relationships with prospects, a quarter of the time spent on alignment, as you just described, top, bottom, or up, down, and sideways, and then a quarter actually sort of in a transaction. Now, obviously, that could fluctuate quite a bit depending upon where you were in the deal cycle, but that was kind of an ideal week.
You were a strategic private equity backed buyer.
Hmm.
So, kind of give us a timeline, and then we'll use this as like the step one of where you are now, step two in regards to narratives. You were successfully closed on a fundraising round. Was it 2021 at Scorpion, and then
2020, end of 2020.
into 2020,
Yep.
going into 21. So
Yep.
21 is where you're like, we have some dry powder to deploy, given the strategy that we've gotten these investors on board with. What was the limitations or or what was the environment around specifically buying for a strategic in a very narrow category, given your previous M&A experience being a little bit more broad?
Yeah, I think the key there, Peter, is again something we've talked about before, is really having a very clear understanding of who you're buying and why you're buying them. Or maybe that should be the other way around. Why you're wanting to acquire somebody and then who that actually leads to in your prospect. I think one of the biggest failures that I've seen, I'm sure you've seen as well, is where people do acquisitions just for the sake of it. They think that doing an acquisition is kind of fun. And so they go and have a bunch of conversations. They end up liking somebody and they do an acquisition and the deal closes and they look across from the table at each other and like, now what? And to me, that was not a well thought out acquisition. It's very much needs to be driven by what are you actually trying to achieve by this acquisition? And that took some time to figure out when I was at Dell. Sorry, when I was at Scorpion, is really getting alignment with those stakeholders from the board, from the investors, from the founders, from the executive team, even from the management team. Like, what are we trying to? Why are we trying to acquire somebody? Is it a pure EBITDA play? Is it a customer acquisition play? Is it a capabilities play? What are we trying to do? Once you've got alignment around that, then it becomes very, very easy to sort of say, okay, now let me go and look at the universe of opportunities out there and see which fits those criteria. Doing a
Yeah.
financial acquisition, I think, is almost easier because you're doing just straight you buy it for X, you try and do something and you sell it for Y. That's pretty straightforward. I think it's the strategic acquisitions that need to be much more thought through.
What I hear you saying is at Scorpion, you had a very specific business strategy in your go to market.
Hmm.
If you were going to be acquisitive, you needed to add assets that were complementary to that strategy and get the most out of the opportunity versus being opportunistic.
Correct. Yeah. So the first acquisition we did was a pure capabilities play. This particular company had some really, really great proprietary technology, which was incredibly additive to what Scorpion had. So that was that acquisition. The next couple were great acquisitions in terms of expanding into existing markets, but ones where we didn't necessarily have a strong footprint. So really around expansion of our capabilities to expand and be successful in those particular markets. So those are a
Yeah.
couple of the examples of how we were thinking about the acquisitions that we were doing.
You also had a technology play at Scorpion that is different than what you have now at
Correct.
Herringbone. It might be helpful to share with the listener that strategic disposition as a buyer that you're bringing to the market because you had different gross margins, you had different ways at scale to support the clients that you're ultimately acquiring. Unpack the strategy a little bit.
Yeah. So for those who are not familiar, so Scorpion has a proprietary sort of ecosystem on which their websites are built, on which they run their paid ads, they do their SEO. Everything is built on proprietary Scorpion technology. That was a decision that was made 20 plus years ago. And I'm sure people have varying opinions about whether that's the right strategy or not. But, whether you think it's right or wrong, that was the strategy. It was proprietary ecosystem. So that obviously then has an impact on thinking about the strategy. Because if you're thinking about from technology, you can't necessarily go and acquire a company and expect to be able to just take their technology and plug it into this ecosystem. It's not like open source. You have to figure out how to get that capability and build it or replicate it or ingest it into the Scorpion tech stack. So that made tech acquisitions a little bit more challenging.
Yeah, for sure. And then also kind of narrows your buy box. So again, I'd love to get under the hood of saying, what does it take to get stakeholders and the board on board with the buy box? So you have the business strategy. What did you have to prepare for your internal stakeholders to then give you a clear mandate when it came to your outreach and the prospects that you were really focusing on?
Yeah, lots of conversations, Peter. Lots of conversations. Look, I think it's for those who have been in similar types of roles, or for those who are looking to be in that type of role, getting the alignment with the stakeholders, especially the executive team, the leadership team, the board, the investors, arguably the single most important use of your time. Because if you do not do that, you will waste cycle after cycle after cycle bringing an acquisition candidate to the table only to discover that it wasn't what the stakeholders were actually interested in acquiring in the first place. So, all jokes aside, it's a lot of conversations. It's about putting together that, PowerPoint presentation that describes what's the market look like, what are the opportunities, how big are these opportunities, what do we think valuations, can we make the economics work, what does it look like post acquisition, what's the rationale for us wanting to pursue this particular type of acquisition. So a lot of conversation, but once you've got that alignment, it just means the rest of the deal flow can accelerate very, very.
Yeah. I have the luxury of doing a deal with you. I was representing the sell side and you're on the buy side, and you did 95%
Yep.
5% of the M&A process.
Yeah, fun. It was fun.
Like, I just want to make sure we double tap. That's having all the seller prospect calls. That's doing the initial preliminary due diligence to build your investment committee,
Hmm.
pitch or approval process. And then you're also diving into the workbook, the QOV, the things that really help examine the integration plan, the opportunity. Like, you do a lot in the
Yes.
deal without having to pull in as many people. So I just want to make sure that's very clear to the listener that there's a lot of different skills in the one thing that we would define as an NA skill.
Well, yeah, yeah. There's a lot in any. I mean, this is why I think in larger companies or ones that are a little bit more acquisitive, you have larger corporate development teams. And if you think about, I mean, to draw a really poor analogy, it's almost like a large scale enterprise sales motion. And so, from that perspective, you're having to do the prospect identification of who they are, then you have to do the prospecting, then you're doing all the follow up. And then once you start to get something interesting, then you have to bring in the experts to do the analysis of the numbers, make sure that looks exactly right. Then you start bringing in the other strategy consultant or strategy perspective to understand, how's this going to start to work in the organization? You have to build the financial model in there. You're doing the legal work, you're doing the numbers, you're doing customer due diligence. I mean, yes, there's a lot of folks that you can rely upon, outside experts, outside advisors. But even with those advisors, you need to be involved in pretty much every step of the process to ensure that this transaction is going to be successful, both during and then post close.
Yeah. It's important for the listener to know that although we just talked about Scorpion, that's not where you are now.
Great.
So let's get people up to date to where you are now. Trinity Hunt out of Dallas, Texas, had an opportunity to put something together, and you joined
Yes.
Herringbone. Give us the introduction to Herringbone and when you stepped into it. Then we'll update to everybody where you're at now.
Yep. So Herringbone Digital is a private equity back. So Trinity Hunt is our private equity backer. But we're doing a consolidation of digital marketing agencies, specifically the agencies that focus on lawyers, dentists, doctors, and the trades. So very, very narrow focus of agencies that we're seeking to acquire. And the rationale for this initiative, Peter, is because we'd seen an opportunity to do this type of consolidation. End clients really wanted an end-to-end solution versus all the subpar solutions that were out there. And agency owners, even the best ones, struggle to find scale because this particular market is really, really tough. And so by combining these agencies, not only do we provide the end customer with the best solution they can possibly get, but we also provide these agency owners an opportunity to de-risk things for themselves, but give them an opportunity to work with other agency owners and collectively achieve a scaled mega agency that's truly industry disrupting.
Yeah,
So
awesome.
that's the genesis of it.
And the genesis from the M&A activity is dramatically different.
Yes.
So Scorpion was, had been around for a long period of
Mhm.
time, was a recognizable brand within the industry, had technology that kind of narrowed its focus of what type of deals it could do. You came into Herringbone and it was almost like blue ocean. Like, you
Yep.
almost got to
Correct.
start the M&A journey as a way to start the company. So
Correct.
explain the differences in that and how that helped you or held you back. I'm curious.
Yeah, I mean, I think the same process was gone through, Peter, meaning that when we were thinking about Herringbone, you had to do the same thing. You had to think about what the strategy was and therefore how that then impacted the buy box. In thinking through the strategy, you also had to understand the market, the TAM, what the end goal was, how would these companies work together post integration. So there actually was a lot of similarities. The answers were different, but the questions that were being asked were actually pretty similar. And so to answer to get back to your original question, you know, the buy box for Scorpion kind of looked like this. The buy box for Herringbone looks very different because the answers to those questions were different, but the questions were the same.
Herringbone started what year?
End of 2024 November was when we did our first acquisition.
And you joined.
Right then, December. Yeah.
Yeah. So it's important to note, like, company formed through its first acquisition.
Yes.
and then matured right away to say, okay, we're going to go out and consolidate this category. Let's put the team in place that we're confident can accomplish it. What was the stated objective for that first year of you joining?
In terms of sort of quantities.
Inorganic
Yeah.
target.
Yeah. So we had some degree of confidence that we would do 2, maybe 3 acquisitions. It was our first year. We were fresh out of the gate, like we just talked about. We were still building a lot of our internal processes and systems. We had aspirations that maybe in a banner year we would do maybe 3 acquisitions.
Since I know where this is going,
See,
your
I'm
setup
setting it
is
up. I'm setting it up.
your setup is like just brilliant. I
Yeah.
just want to make sure.
But no, that was, based upon all the back of envelope math we did, which was here's number of agencies, here's number of outreaches. We sort of mapped out, modeled out what the funnel would look like, conversion rates at each stage of the funnel. We thought, we would come out with, 2, 3 acquisitions in our first year, which would obviously give us momentum in our second year, but 2 to 3 for the first one. To answer the question that you're about to ask me, Peter, in addition to the one that we did at the end of 24, we actually ended the year with 5 acquisitions closed. So a total of 6 acquisitions closed and with another one under LOI. So, we far exceeded our expectations. And the really, really, probably not nice thing, the more important thing, Peter, is every one of those acquisitions is incredible. Like we couldn't be happier with the way the acquisition went. We couldn't be happier with the process. We couldn't be happier with the founders that have come on to the Herringbone platform. And, 6 months into 2026, each of the individual portfolio companies are also just having tremendous years. So everything about what we did has worked and then some.
Yeah, it's very different than the way you're approaching M&A at Scorpion, which was assimilation. We're going to
Yes,
bring you on. We're going to migrate you onto the Scorpion platform. And yes, we need the strategy to overlap, but we also needed the technology opportunity to be very, very clear. In this, you started a company, went out and started acquiring portfolio companies and did not integrate.
correct.
That means you get to move a lot faster, doesn't it?
It does. And I think there's always levels of integration,
Well,
meaning,
let's talk to the timetable because you
yeah,
joined December. The first acquisition was in November, and then you followed it up with 5 acquisitions. So what did the light integration look like, and what expectations did you set for the founders?
yeah. And it's still going. The integration on efforts are still ongoing. But, part of what our strategy has been to date is acquiring companies that are phenomenally successful. They've already kind of winning. And,
Can you
yeah,
define that? Just
sure.
because
So
a
let
lot of
me,
people, because those are quantifiable, but they're also qualitative, where you can say great cultures, great founders, great market. But what are the things that you measure in regards to that term?
I'll answer that question in a second, but just, sort of back up. There's general, and I think we've all sort of seen this, a couple of different models around the way investors like PE firms think about an opportunity. There's the model which is let's go and find an underperforming asset because we, the PE company, know that we can create value by turning that underperforming asset into one that is performing at or above market. And these are the ones that typically make the headlines because a PE firm comes in, replace the CEO, replace management team, fire a bunch of people, impose workflows, software, et cetera, et cetera. That's the perception I think that most people have with respect to PE, the sort of fixer up model. There's also another very valid strategy, which is the approach that we take is let's go and find a business that is already doing really, really well. And so to your question specifically, Peter, really, really well means, great founder, great executive team, period, great product offerings. And then you got some of the quantifiable measures in terms of strong year-on-year revenue growth, strong profit margins, strong retention. Those are sort of the 3 critical components of it. But then you've also got some other qualitative investment as things like brand reputation, perception in the market, et cetera. So our model has been to date to find the companies that are those winners because they're already on fire. And then what we see as our role is how can we help that business by pouring more gas on that fire and just helping them accelerate their growth, accelerate their profitability, or just be better in a way that they probably had not been able to achieve by themselves.
What was the entry EBITDA for those targets? Just to get a size and scale expectation for everyone.
Yeah, so for yeah, we so those sort of we call them platform companies. These ones that we want to build around, 3 to 4 to 5 million of EBITDA, sort of plus minus, is where those companies need to be, because especially for those who are familiar with the agency world, there is these thresholds, these natural barriers that are hard to push through. If you can push through 1 million of EBITDA, you're doing well. There's another natural barrier at sort of 2 to 3. If you can get above 3, then you're a certain style and a type of company. You've reached a certain level of, call it organizational maturity. And that's what we were looking for, as agencies that had sort of crossed over that threshold.
What did your ideal week look like going from, maybe entertaining a deal in a year to 5 deals that year? Because you can't go all in on a single acquisition with the same level of intention as you could at Scorpion.
Well, fortunately, as I've already talked about, I'm surrounded by some phenomenal resources. So the M&A team or the corporate development team is no longer just me. We've got a set of brilliant folks.
That helps quite a
That
bit, doesn't it?
it does, and they're brilliant, and they help at all parts of the transaction. So, got some help on the top of funnel, sort of prospecting and bringing folks in the funnel. I generally spend most of my time nurturing and engaging those leads, getting them up to the point of LOI. And then we've got some incredible folks that will typically see it through from LOI all the way to close. So, definitely more resources on the team, which, back to your question, Peter, is the only way that we were able to work at the speed that we were able to work at. Don't get me wrong, there were still many long days and sleepless nights, but having that sort of team-centric approach is the only way to unlock that sort of deal velocity.
100%. How do you organize that group? Do you use project management technology? What's the department tech stack that helps you process and collaborate with these stakeholders in the M&A process?
Yeah, fortunately, Peter, we're so close that we don't actually necessarily need project management software to keep the communication flow across the teams within our sort of little different areas.
Fully remote though, yes?
Yeah. Yeah. So
Yeah.
we use HubSpot, and we just recently transitioned over to HubSpot to help us with sort of our prospecting efforts and lead nurturing efforts. Once we get something under LOI, there are various tools to help manage the data room and things like that. But and then just general productivity software, Teams, to help communication. And then we also have a very consistent communication and cadence for the team, the broader team, to discuss opportunities and talk about what's working, what's not, where the roadblocks are, what's to say this deal, how do we approach it. So very collaborative across all parts of the transaction.
Great. Is that in the form of like a weekly stand up, daily stand up? Give it some specific names.
We definitely have a weekly conversation where we sort of talk about deal specifics within a smaller team. We also have a weekly stand up with a larger team, and then we do a lot of ad hoc communication.
In processing 5 transactions a year, what did the investment committee process look like to support that? Was it you going off and working on deals and then bringing it occasionally? Were they more involved? Give us
Yeah,
some insights to that.
we're extremely fortunate in having THP as our sponsor. They are by far and away, and similar to you, I'm sure Peter worked with lots of different PE firms over the years. They are by far and away the best PE firm I've ever worked with, and our principal specifically is just a fantastic operator. But one of the things that we learned very early, which has helped us, is having them be involved or having them being informed very regularly. So from the outset, and even 15 months into this journey, we still provide detailed weekly updates about what's happening with M&A from top to bottom. And so there's never any question. We will have very robust debates about the whether a deal should be whether a deal should be followed through or not. It helps that they're really smart, so they ask really good questions to
Yeah.
which we generally have the answers to. But just that constant communication ensures that we're never too far straying from that alignment that we established from the outset.
A lot of corporate business development professionals in strategics, they don't get to decide whether or not they close on deals. And so there's this friction when it comes to setting inorganic targets. When you and I spoke, you said Herringbone's primarily going to grow through inorganic,
Yes.
which means you have a target. Now, that may not be a target within a specific timeline. It might be. Help us understand how an M&A department like yours can confidently stand by targets when others, feel insecure and aren't able to say, hey, yes, put a target on M&A.
Yeah. Look, I think that's partly driven by just understanding the market. Like when you look at what the TAM looks like, again, you can model out what your conversion funnel is going to look like. And so if you say that I've got 100 agencies that fit my buy box, and I can look at what each stage of the funnel looks like, and we measure this, we're going to be able to measure it even better with real software in place, but we can measure this and we can sort of back into this and say we can achieve this target or not. And we actually had this conversation at the beginning of this year, whereby we sort of did the back of envelope math and we said this is what our target is. Not sure how we're going to get it when we still have this very narrow buy box. So
And you outperformed your first year,
correct. Yeah.
which is like the
Exactly.
worst thing you could do in your first year.
Exactly.
You have a target of 2, you hit 5, and now let's set the next year's quota.
At 5. Exactly. And so, that was the conversation we had, which was, hey, look, we've modeled this out and we can't get to the target. So either we need to revise the target or we need to revise the buy box criteria
To accommodate. Yeah.
or we rely upon improving some of those conversion metrics or we find that the TAM is actually perhaps a little bit larger than we anticipated. So all of those came into play, but ultimately it can be a very mathematical exercise.
Yeah, it's very quant. A lot of M&A is led by the financial model. So you shared publicly the size and scale of Herringbone today. So let's talk through, you did 6 acquisitions in, I call it the first year of effort of M&A.
Yeah.
That got you to what size?
We're now sitting around 100 million revenue across
Okay.
across the 6 agencies.
So, but if you had 2 as your original target, then you didn't have 100 million of revenue as year 1's target.
Correct.
So how much more did you outperform to the target? Help us understand what the goal was when they first sat down and said, we want to create Herringbone.
Sure. I can't get into sort of too detailed on the specifics, but we basically achieved 2.5x our goal on the first year.
Terrible when you're trying to set expectations for the next year.
Yeah.
So,
like, what do you mean you can't do that again?
Yeah, goodness. So you're at 100 million of revenue. A typical private equity is looking at a certain level of critical mass and threshold in regards to performance. This isn't Trinity Hunt's first agency portfolio, so they know this game. So you have a certain inorganic target for the entire expectation of this investment. And you're still here, which means they haven't burnt you to a toast with this target. So help us understand what you think it's going to take compared to what it took to do the first 5 to get the next 5.
Yeah, I think there are two things that we need to solve for over the course of the next 12, 18, 24, 36 months, whatever our journey is. Number one is exactly what we just talked about, is how do you continue to find additional M&A targets? And again, that's a function of keeping your buy box criteria as it is and just working that buy box a little bit harder. I think one of the things that you're probably seeing, because we're certainly seeing it, Peter, is there is more, especially within the agency world, there is more interest in M&A than I've ever seen in the last, 5, 7, 10 years I've been doing this. Agency owners are really interested in either buying and or selling. And so a lot of the folks that perhaps were great acquisition candidates, but told us no, we're starting to have some of them come back and say, actually, tell me a little bit more about what an acquisition would look like. And whether that's because they're seeing more acquisition in the market or whether because they're starting to see the reality of the AI impact or whether they're just starting to get another year of their tenure. I don't know. It's probably a combination of all three, to be honest. But we're definitely seeing an uptick in acquisition targets. So, we've got to keep the velocity on the acquisition front. The other piece, which I think is something that anyone in my seat does need to be very mindful of, is post close integration. Like I think if you are a corporate development sort of executive and are not paying attention to what happens on the integration front, you're only seeing half the puzzle. Because inevitably, if you only have that blinder on, you're going to do a deal that fails because it couldn't get integrated properly.
Yeah,
Uh,
organ rejection, high
Organ
probability. Yeah,
rejection, exactly.
yeah.
And so now we've got a tremendous amount of effort going into making sure that we balance the identity of those 6 portfolio companies, because that's what's made them successful individually, with the need, because there is benefit to looking for those integration touch points. Whether that be something simple like getting everyone on the same consolidated version of NetSuite, or that might be something a little bit more complicated. There's definitely a need to have that solid operating model to end up with an outcome where you actually one company versus just a holdco with a random bag of brands.
Yeah, it's important to set the distinction between the two because right
Yes,
now you
huge.
went out and built Herringbone with 6 platforms.
Hmm.
And now if I'm, the board, I'm saying, well, now you have 6 platforms of which we can acquire into,
Yes.
and we're still looking for a few more platforms. You've actually widened the scope of the project. How are you rank stacking or prioritizing the pipeline relative to A, hitting your acquisition targets, but also finding the right fits from a tuck in or bolt on perspective?
Yeah, it's and again, I think, the true corporate development professional, they're thinking about all aspects of the market all the time. One of the things, and again, I think you and I know this very well, is the number of deals that come onto our plates through a banker-led process, especially at our size, the types of companies we're looking at, the
Every
number
deal.
of deals that come through on a banker-led process is going to be the vast minority. The vast majority of deals are going to be those proprietary deals that you yourself have sourced and nurtured. And so, roundabout answer to your question, Peter, is I view my role as important to speak to everyone all the time. So equal effort in speaking with the platform companies, equal effort to looking at new platform opportunities, equal effort going into thinking about pipeline for that sort of tuck in, because you never know what's actually going to be the one that gets over the line for you.
This is a slightly setup question because I have some context around this, so I know. When you were out and looking for anchors in your next platform,
Hmm.
the only people you really had to get approval on this was the board, and they
Correct.
had to fit the strategy.
Yep.
To go out and do tuck-ins, you
Hmm.
now have the operators,
Yep.
the partners that have stayed in the deals as stakeholders. How do you approach buy-in from those folks versus what you've done historically with just mainly the board?
We're super fortunate, Peter, that the founders of these companies are leaning in. Like they recognize the value that can be created by doing a tuck-in. And so they're actually now the ones coming to me and saying, "Hey, we've been in this industry for a while. We go to all the trade shows. We know all our competitors. Have you talked to Bill? If not, I'll make the introduction." I think David would be a great candidate for us. What about Susan? Can we bring her into the fold? So, we're very, very fortunate that they're willing to do that. And then B, we're very fortunate that these guys have so much credibility in the industry that it's very easy for them to make the connection for us into those potential tuck-ins.
How are you prioritizing it then? Because it's really interesting when you have call it a 5 company target in a year. You have tuck-ins being introduced. You have your own proprietary outreach going. Like, how are you organizing it? Because it sounds like you could never sleep and still not keep up.
Yeah, it's a great question, Peter. Look, we are in a position that we're very fortunate where we're not obviously desperate for deals because we're on a great track record. So we actually have the complete luxury of making sure that the only deals we do are the ones that we get really excited about. And to be honest, that it's June. I could probably give you 3 examples of deals that others might have said yes to, or us would have said yes to, if we had paralleled or sliding door in our different way, but we said no to because we just, it was in that gray area of the break of the buy box. And so in terms of priorities, that's the biggest prioritization we do is, where in that buy box are you? If you're right in the middle, we're going to prioritize you. The further you start to drift away from that middle, the less we're going to sort of really focus in on.
How long does it take you to identify that criteria or that threshold within a prospect?
Yeah. They should be asking you that question because you're the expert at this. I learned some of
These
it.
are setup questions too.
I learned some of this from you, Peter. Now, look, it's again, you and others that we've worked with have counseled me well on this, which is you should know within the first 1 to 2 calls whether it's worth either of your time. And the way I sort of think about this, and everyone's got their own process, but my process is that first 30-minute intro call is very much exploratory and rapport building. Can't underestimate the importance of the need to build rapport and to actually come across as a human being that cares about other human beings. It's really important. But then very quickly you can follow up with that second call where you start to get into the nuts and bolts. And if you're not walking away from that second call with a clear perspective of whether this is something worth pursuing now or worth pursuing in the future or not worth pursuing at all, then that second call didn't go well.
Yeah, great. And you're at a disadvantage. You have all these advantages, but here's your disadvantage. They know you're private equity backed. You say you're private equity backed, so all of them are expecting you just to throw bags of money at them. And so let's talk about that a little bit. Coming as a buyer who you don't have an unlimited check, but you definitely could afford the businesses on the slightly higher end of the spectrum. How do you bridge showing up and offering more than the company's worth by being the PE buyer to an unsophisticated seller versus, okay, I'm still going to pay you what I think the strategic value of this opportunity
Yeah.
is?
Yeah. And Peter, I think one of the reasons we've been so successful, to be honest, is we are a very, very disciplined buyer. To your point, we've got, you know, a seemingly unlimited supply of capital, unlike many others out there who are trying to do the independent sponsor or the search fund approach. We've got the capital already committed. So to your point, that is a massive advantage that we bring to the table compared to many others out there. But we temper that by being very, very disciplined. And so we have our own internal economic model of what makes sense for us to pay, and we're not going to budge from that. We're not going to be the undisciplined buyer that throws cash away. And I make that very, very clear on those introductory calls. To your point, a lot of the folks that we speak with, they just don't have a lot of experience in this world. And that's totally fine. I'm not expecting them to. So I definitely see my role is partly trying to set realistic expectations that are based upon actual market experience versus what they heard that their buddy sold their agency for, or what they read in the Wall Street Journal, or they see trade on the public markets. And look, oftentimes that can be a little bit of a confronting conversation. Is that I was expecting X. Well, I'm sorry, that's not what your business is worth. But let's have a conversation around how you can get to that valuation, which is typically grow a little bit bigger, grow a little bit of profitability, grow a little bit faster, focus on retention. And in a few short 6, 12, 18 months, you will get to that valuation that you want. And then we can have another conversation.
Yeah. How are you underwriting against AI? So I'd love to hear how you're thinking about it as kind of our closing.
Yeah, we sort of see AI as both, classic cliche line, threat and opportunity. Everyone's using that line now, but it's true. There is a threat and opportunity. There are a couple of approaches that we're taking to AI. So, we're very fortunate. We just hired an one of the industry leading AI experts, and he's fronting up all of our AI initiatives, which is phenomenal. But there are sort of three ways in which we're seeing AI.
You want to shout him out or no? Keep him private.
Sorry, shout him up. Yeah, Dan Inkley.
Okay.
Dan
Yeah.
Engler. Yeah. Yeah, he's amazing. Founded GoFish, sold to Trinity Hunt, like one of the industry leaders with respect to AI in the agency context. I mean, Guy's amazing. So we're very, very lucky to have him. But there are really sort of three different prongs. So number one is a prong that I think most people are thinking about, which is how do I use AI to streamline and optimize my internal operations, using them for content writing, for design, for website building, all the stuff that people talk about, well, agency owners talk about when you ask them how they're using AI, they talk about those things that I don't have to hire headcount anymore, or whatever the case may be. That's that's one leg of the stool as far as I'm concerned. Another aspect, which I think people are starting to talk about, but people don't know how to talk about it yet, is how is AI impacting the sort of results? Everyone talks about, generative AI or GEO, but you're starting to see more and more agencies, especially the forward-thinking ones, recognizing that I kind of need a new set of products, but I kind of don't. I kind of need a little bit of both. They're starting to figure that out as we start to learn more about how the Googles of the world are using AI on their own algorithms. So there's that sort of piece. And I think that's really, really hard for the average agency owner to get their heads wrapped around. The first one's relatively easy, second one's a little bit harder. The third one, I think, is really hard for an agency owner to get their heads wrapped around, which is why we're so lucky that we've got Dan thinking about this on our behalf, is how does AI impact the end customer journey? So pre-AI, you need a dentist, you need a doctor, you go to Google, dentist near me, you look at the website, look at the reviews, you make a decision. You give them a call, you book an appointment. That's the way it used to be. I think no one really quite knows how AI is going to change that journey. We're certainly seeing in some of the other industries, hasn't impacted local yet, but that's only a matter of time. We just don't know how to do it. So that's the sort of three prongs of AI as we see evolving over the course of the next, 2 to 3 to 4 years.
Is it fair to say you underwrite a position of strength, knowing the types of businesses that you have and the founders you have will be working collaboratively for a solution that still brings value to the market?
Yeah, I mean, I think we can underwrite that because, Peter, we are probably between the expertise we already have at Herringbone, the expertise we have in some of our portfolio companies, and the resources that we can bring to bear. I would be hard pressed to think of anyone that is better prepared for any AI disruption than sort of Herringbone.
That's great. If someone's listening to this and they're thinking, hey, he has so much value to offer. Can I pick his brain about agency valuations? And
I would be flattered if that was the case, Peter.
well, you constantly, let's be fair,
No,
a lot of people talk
yeah,
to private equity backed strategics or corporate business development teams before they're ready to sell
yeah. Look,
because they don't know. And
yeah,
you are a great resource. The thing I love about your approach as the sponsor and the lead on these transactions, you frame with education, empathy, rapport. Like you're just, and again, I'm complimenting you too much,
it's
but
very good. Thank you.
like keep it going.
Yeah, yeah,
But you're so giving with
yeah,
expectations and education. If someone's listening to this and they're curious, is that something that they can reach out
yeah.
to you and where?
Yeah, look, I sort of take a little bit of a selfless and a selfish approach to this. Peter, selfless is that, I love this, just like you do, love this. And so if there's an opportunity to help educate folks out there, because you and I have the privilege of doing this all day, every day. If you're a business owner, it's probably the first and only time you're going to go through a transaction. Kind of daunting. And so anything that I can do to help someone get up the curve with respect to knowledge, I'm thrilled to be able to do that. That's the selfless. The selfish is that, look, there's, as you know, doing a transaction with a more informed a seller always goes better. So if it means that I can help educate somebody that might turn around in 6, 12, 18 months and actually be on the other side of the table, well, then I'd benefit from that perspective as well. So sure, that's a long answer to say I love talking about this with anyone about any time. Easiest way to get a hold of me is via LinkedIn. I'm pretty active on LinkedIn, trying to publish content to help educate folks. So feel free to subscribe or follow and just see what I have to say. Dispute it, refute it if you'd like. We're happy to engage. And or just simple Azim at herringbone.com, herringbonedigital.com. So just Azim at herringbonedigital.com.
Wonderful. Azim, you're always such a great resource for the community. I appreciate you, my friend.
Thank you. Likewise.
Have a wonderful vacation at the
Thank you.
start
I
of your
will.
summer.
Yes. Oh, take care, Peter. Thanks. Appreciate
Cheers.
it.